And gold is basically the old neutral reserve asset. It's analog sound money. Bitcoin is digital sound money. It's superior to it in every fashion because to me, what's going to happen is we are headed toward a major debt crisis. I mean, we're, as Lynn Alden points out, we're in fiscal dominance right now. There's no will in Washington, D.C. to solve the problem. There's no discussion of cutting expenses or spending. They literally have to continue to inflate and debase the currency to keep the system running. Based on pattern recognition and what it's done before, I anticipate we're going to see between 180 and 300 as a peak on this next run.
As traditional finance stumbles under pressure, Bitcoin is gearing up to shake Wall Street to its core. Today, we're joined by Larry Lepard, a powerhouse of economic insights, who's pulling back the curtain on Bitcoin's rise and the shifting tides of the financial world. But that's not all. This conversation unearths how energy trends and the rise of AI are set to redefine power dynamics in ways we've never seen. Will Bitcoin become the escape from an outdated system, or is gold still the ultimate safety net? Stay tuned, because what Larry reveals might just change how you see the future of money.
So what they both represent in my mind are neutral reserve assets that solve Triffin's dilemma. And Triffin's dilemma is the issue that, the U.S. has the reserve currency and therefore we had to print it and grow it or else the world runs out of money. And so what they made a mistake at Bretton Woods. They should have picked the neutral reserve asset, which would have been gold. And gold is basically the old neutral reserve asset. It's analog sound money. Bitcoin is digital sound money. It's superior to it in every fashion because, and by the way, the reason the gold standard failed for two reasons. One, politics and the law. We went off it. We're not even on it anymore. So, but two, they also created a ton of paper gold, and they were really good at doing that. That's hours-long discussion unto itself. But what Bitcoin offers is, and gold is heavy. It's hard to verify. There've been tungsten, bars plated with gold. It's got all these problems, so to speak. Nobody even really knows who owns what. It's tough to verify. We haven't audited Fort Knox since the 50s. There's amongst conspiracy folks, and I'm sympathetic to it. There's some question as to whether we really have the gold we say we have. And so it's a problem. And, because it's hard to know who has what, you're kind of dealing with a ledger that you're not sure is honest. The thing about Bitcoin that makes it so different is that the ledger's out there for everybody to see. And it's triple entry. It's you and me doing a transaction, but it's also published and everybody can see it. And so, it's easier to store. It's less costly. It's easily verifiable. You can move billions of dollars in minutes as opposed to, try and move $1 billion worth of gold. So in every way, shape, and form, it's superior to gold. And ultimately, it will supplant gold. It'll flip gold and become digital gold. I think it'll become the new Marere, as Safe has said. And so, now this is not overnight, right? This is over, decades. Either the debt is going to collapse or we're going to have to inflate like crazy to get the GDP to close that gap. So one of those two events is going to occur. And in my opinion, it's probably likely to be kind of a combination of both. Debt will start to collapse in the sense that people will shun the debt and maybe it won't even be money good. The U.S. federal government debt will probably be money good, but other debts may not be. Yeah, I think that's right. We're running about a 6% deficit right now, 6% of GDP. And, in theory, we've got a healthy economy. There's an argument that it's not beneath the surface, but and if you look at the 2008 downturn or the 2000 downturn, in both of those cases, you can see on the chart, debt to GDP went up substantially, as a percentage. It looks like the 2000 case, it moved at least 3 or 4 points, and in the 2008 case, it moved much more than that. So yeah, and the next downturn, this is going to get a lot larger, and this is James, as you pointed out in the prior chart, James Lavish just said this is what we call a death spiral. One of the charts you don't have, but I think everyone should consider or look at is, go to the Fred site and look at the U.S. federal interest expense. It's just balloons straight up. And so, the federal interest expense gets larger. That makes the deficit larger, which means we got to sell more bonds to cover the deficit, which means the debt gets larger. And then we pay more interest on the new larger debt figure. And then people begin to not trust the bonds that they're going to get paid back. So they demand higher rates of interest. economist. And I mean, you can kind of see where this is going, right? This is a complete, death doom loop is what it's been labeled. And that's correct. And now there's a solution to that. And the Fed knows what it is, and we know what it is. And that is, the Fed starts buying its own bonds. And it says, okay, well, yeah, we got to issue these bonds, but we'll buy them, and that's just another way of saying they're going to print the money. They're going to the degree that, yeah, okay, fine. We're running, our debt is collapsing and interest rates are going higher, but we can't have that. We'll just go in there and we'll bid for our bonds. Well, what money are you going to use to bid for it with? Well, new money that we printed. My belief is that, that we've passed the event horizon. As Lynn says, nothing stops this train. The next print's going to be even bigger. More and more people are going to come to realize what we've come to realize. And a mass version of Gresham's law is going to take over, where Bitcoin and gold are going to go to prices that are unimaginable today. The cost of living is going to go to prices that, are unimaginable today. A lot of people are going to get squeezed, which is terribly sad. And there's going to be a political revolt. And somebody like a Robert F. Kennedy or, somebody else, or a Ron Paul type, but there'll be a new one to emerge, is going to stand up and say, guys,
enough.
Enough. The problem here is the money is broken. We have absolutely got to return before we go full hyperinflation. And it's possible we'll go full hyperinflation before the political will emerges, but we've got to solve this problem by going to a sound money piece, some sort of a sound money. To me, what's going to happen is we are headed toward a major debt crisis. I mean, we're, as Lynn Alden points out, we're in fiscal dominance right now. There's no will in Washington, D.C. to solve the problem. There's no discussion of cutting expenses or spending. And, they literally have to continue to inflate and debase the currency to keep the system running. Now, they could stop debasing the currency and the system will collapse, but that looks like 1929. That looks like a stock market falling and the value of everything falling. And they've made it pretty clear they're not going to do that. I mean, Bernanke set us on this path when he gave that speech back in 2002, deflation, making sure it doesn't happen here. And he said, the U.S. government is blessed with a technology called a printing press. And, therefore, I believe that we can print whatever money is necessary, we're not going to have deflation, because to the degree that debt collapses and creates deflation, we can print to prevent that. And debt is inherently deflationary. You take on debt and you're spending, you're bringing future consumption into the present, but in theory, you'd have to pay it back in the future, which is a deflationary event.
So far, Larry Lepard has provided a fascinating look at Bitcoin's emergence as a viable alternative to gold and traditional assets. He emphasizes the urgent need for awareness of the growing debt crisis and Bitcoin's unique advantages, which make it a formidable contender in the financial world. As Lepard paints a picture of a future where Bitcoin could skyrocket in value and reshape the economic landscape, stick around to hear more about his insights on the evolving dynamics of power in our society.
Some of these, there aren't many investments in the world that have returned, 2,000 times their initial cost in less than 25 years. And yet there are businesses like that in the networking business. Amazon is one, Facebook is another one, Google is another one. And so when you have a business or a thing that's a network where the value and the Metcalfe's law applies, the value grows at the square of the number of users. And, look, who's going to use another search engine other than Google? Everyone goes to Google and everyone uses Google, and therefore people join Google, and it becomes a flywheel that you cannot stop. And that's what's going to happen with Bitcoin. It is a network, and its value grows with every additional user, with every additional transaction, and it becomes more and more the numeraire. And so, yeah, as you point out, you and I can see it and believe in it, and I think others are coming to see it. And based on pattern recognition and what it's done before, I anticipate we're going to see between 180 and 300 as a peak on this next run. And so we're days, weeks, months away from breaking through 73 and squirting up into the low hundreds quickly, in my opinion, on Bitcoin. And then as things get going, it'll go further. The piece that I can't predict is when the quote unquote big print is going to come. The big print is coming. It's definitely coming. I just don't know when. And that's because it has to do with when the problems get serious enough that the Fed stops the small QT that they're doing, and they took it from 60 down to 25, and when they take interest rates down more aggressively. And by the way, I'm on the opposite side of the CME. I think they're going to continue to drop rates pretty quickly. I think the bond market is telling them they have to, and also their interest expense is telling them they have to, because they're in fiscal dominance. So Yes. I mean, to answer your question, 2035, yes. I mean, I think there'll be probably two competing neutral reserve assets, gold and Bitcoin, with gold on the way out and Bitcoin on the way up. And I think the dollar will be a transaction medium, if not gone, by 2035. I kind of place the end of this whole experiment at the 2030, 2031 or 2 area. If you kind of look at fourth turnings, I mean, this fourth turning is clearly about what is money. You know, for a while, gold and Bitcoin will coexist, and then eventually Bitcoin, I think, will supplant gold. That's kind of how I see it. And, you know, these fourth turnings tend to last 25 odd years. And so if you kind of consider '08 to be the beginning and do the math, you know, you're in the later this decade, early next decade.
Larry Lepard's insights shed light on the transformative potential of Bitcoin and the shifting economic landscape ahead. As we face challenges like rising debt and evolving technology, understanding Bitcoin's role becomes crucial for anyone invested in the future of finance. Subscribe for more expert analysis and insights into how Bitcoin and other innovations are set to disrupt the status quo. The future of money is being redefined, and you won't want to miss it.